Hey guys, so in this video we'll be solving question number 3 of 9706/21 May-June 2025 paper 2, which is fundamentals of accounting. If you want to see the other explanatory videos of question number 1 and 2, then I'll put them in the link below, so feel free to check those out. So let's get started. Question number 3 says, K. Khaled, the owner of a retail business, provided the following information. For the years ended of 31st of December, those 2 years, 2024 and 2023, gross profit margin is 48%, and for 2023 it is 45%. For the profit margin of 2024 it is 12%, and for 2023 it is 13%. Part A says, state the formula for calculating each of the following ratios. So, in the accounting book, I think it's like chapter 10, it says there's a chapter called accounting ratios. So we just have to memorize all of them. We have several examples here. We have gross profit margin, this one. Then we have profit margin, which is this one. So the formulas for each of them is actually very simple. Gross profit margin is going to be gross profit divided by sales times 100. And then for profit margin, it's going to be net profit divided by sales. I will give a cheat sheet for all the formulas and all the accounting ratios that we need to know for the 9706 exam. I'll put it in the link in the description. Part B says, suggest 2 reasons which could explain the increase of the gross profit margin comparing 2024 and 2023. So let's compare. As we can see,
in the year 2023, the gross profit margin was 45%, and it increased by 3% during 2023 and 2024. The profit margin decreases in 2023 from 13% to 12%. Khaled may have increased the selling prices of his products. This would increase revenue while the cost of buying the goods stays the same, so gross profit increases, causing the gross profit margin to rise. Khaled may have reduced the cost of purchasing his goods. For example, he could have negotiated better prices with suppliers. This reduces cost of sales, increasing gross profit, and therefore the gross profit margin. The logic to remember: gross profit equals revenue minus cost of sales. Gross profit margin equals gross profit divided by revenue times 100. So, to increase the gross profit margin, Khaled could increase in selling price will cause the gross profit to increase.
So what could explain the decrease in the profit margin despite the increase in the profit? Okay, let's see. Okay, so in the marking scheme, they put other incomes were reduced and reduced efficiency in controlling expenses. Okay, this is true, because in the income statement, we all know from the first video, I explained what is the format to get profit, correct? So the formula for getting profit, which is also the same formula of the income statement, we have revenue plus with other incomes, then we less with expenses to get the profit. So what can cause profit margin to decrease? First is when incomes decrease, because incomes is one of the factors which increases profit. So to decrease the profit, we have to decrease the incomes. Same with expenses. To decrease the profit, we have to increase the expenses. Yeah, hopefully you understood. If you didn't understand, then go and check the first episode of this series of 9706 solutions. Okay, next part. Additional information. It says here. It says Kahel. How do you pronounce this? Khaled has compared the recent liquidity ratio for his business with ratios for businesses of a similar size and trading in the same goods. Current ratio, acid test ratio. Now, first of all, what are these formulas? So current ratio, the formula for current ratio is going to be current assets divided by current liability. And in ratio form, we have current assets, ratio, current liability. But on acid test ratio, we're only calculating using the very liquid current assets. Very liquid current assets, we have bank, cash, debtors, and that's it, yeah. Bank, assets, and debtors. And we always less inventory for acid test ratio, because inventory is not easy to turn to cash. So the formula for acid test ratio is going to be current assets minus inventory divided by current liability. So it says Khaled is pleased with the results of his comparison. D. Explain with reasons whether or not do you agree with Khaled's view of his business's liquidity positions. Justify your answer by commenting both ratios. This is a 5-mark question. Okay, this is a 5-mark question. So I want to see how did they exactly answer this in the marking scheme. But what I think is we're going to assess the assets, the current assets ratio and the current liabilities ratio, and put the valuation of those two ratios here. And then after that, at the end, we're going to justify if it's true or false what he thinks. Do you agree or not? Let's check in the marking scheme. Okay, so this is what he did. Explain his reasons, whether or not you agree. So first of all, the first 2 marks is going to be the agreement. So why would we agree? The second 2 marks is going to be why we disagree. And then we will justify our answer saying whether we agree and disagree, which at the end will give us 5 marks. Okay, so for question number part D, we can see that for some reason they put it backwards, 2023 and 2024. But anyway, let's compare. So in 2023, the current ratio was 1.45 ratio 1. And then the current assets increased, from 1.45 to 1.60. So this means that since the current assets increased, now the ratio is going to be closer for the surrounding businesses near the similar businesses to Khaled's business. So this means that Khaled, this man, will be able to pay some short-term debts more easily, which is an agreement. So this is actually a benefit of the current ratio from 2023 to 2024. Now for the acid test ratio, we have to put two benefits and 2 disadvantages. So another benefit, we have to use another acid test ratio. So a benefit of the acid test ratio, as we can see, in 2023, it was 0.75, and then in 2024 it was 0.62, which means it is decreasing. Now, what does this mean? This is actually a good thing, because now it's becoming more similar to the other businesses. So let's check in the marketing scheme what they said. Yeah, as you can see here, they said despite being less average for similar businesses, the current ratio has improved. This means it'll be easier to pay short-term debts. And then despite the decline in the acid test ratio, the liquid assets are being used more efficiently and are now operating at nearer the average for this type of business. Okay. So that's for agreements. Now for the disagreements, because we have to put two agreements, two disagreements. For the disagreements, we can say that okay. For the current ratio, for 2023, okay, it is going to be 1.45, and it increases to 1.60. Okay. Okay. So this is what we can see from this. The average amount of current assets that we're supposed to have is 1.85, correct? So although the current assets is increasing from 2023, 2024, and hopefully will continue to increase, right now in the financial years that we're given, which is 2023 and 2024, we are still operating below the average of current assets. So that means we'll still struggle to pay the short-term debt. So that's the first disadvantage. The second disadvantage is that, as we can see, the acid test ratio is decreasing. So this means that our current asset liquidity is also decreasing, which is not a good thing, because that means that the amount of current assets that can turn into money quickly is reducing. We can check here. Difficulty in paying short-term debt. That's correct. 1 mark. And acid test ratio remains above average, which indicates liquid resources are not being used effectively, which is also correct. And then after that, at the end here, the last 1 mark will be obtained by giving a decision whether we agree or disagree, and then support it with a comment. So that's also very important, we must do. Okay, part E. There's some more additional information. So Khaled is aware that the size of business and trading in similar goods are not the only factors to be considered in making comparisons with similar businesses. Explain 2 other reasons why Khaled might find it difficult to make valid comparisons with similar businesses. Okay, so this is actually the last question. Okay, so for part E, I'll reread the question. It says, explain 2 other reasons why Khaled may find it difficult to make comparisons with similar businesses. So first of all, as we know, obtaining the financial reports of other businesses is not as easy. So first of all, it may be difficult to obtain financial reports of other businesses straight away, which can also affect the valid comparisons of similar businesses. That's the first reason. The second reason is that it's very coincidental for 2 businesses to use the same exact methods of recording. For example, one business maybe Catalyst Business may use the reducing balance method to record the depreciation, and another business with a similar business may use straight line method, which can make it difficult to have valid comparisons. Okay, so hopefully you've understood today's lesson, where we finished explaining question number 3. Okay, next video, stay tuned because we'll be covering this extremely difficult topic of absorption costing. Then we have production departments, which is actually not that hard, because we just have to know, because this one, for example, is going to be rent. Machinery costs is going to be depreciation. So it's not that hard, but stay tuned. I'll be explaining it in more detail. Thanks for watching. Don't forget to like, share, and subscribe.